topic is how the branches of banks they do the business. So we can say that this is about the business approach, how the bank makes their branches to do the business. So according to that business approach, it is divided into three categories. So first one is branches are classified based on segments, which is called segmented approach. Second one is geography based approach, and third one is classification based approach. This is a very simple thing. So what is this segmented approach? Segmented approach means the banks, they classify their branches. Basically, it is about the location, placement of the branches, where the branch should be opened, like that. So the branches, so it is about the classification of the branches, or the placement of the branches, or the opening of the branches at some places according to the business potential. What type of business are available there and what type of business the branch can get. According to that, the branches will be opened in that category. So that is called business approach. So first one is segmented approach. Segmented approach means the branches which are established or opened or placed or located, which are classified, they will be classified based on the business potential. Business potential, what type of business the branch can get from that area. And according to that business potential, the branch will be given target for those things only. So major potential in such some areas will be there. So branches will be given target to achieve those targets. So specifically, those target will be given to such ones. So the branches can be classified as, say, first is like a resource center. Resource center means what is the bank's main resource? What is the bank's resource? For doing the business, no, resource. No, to do the advances, what is the resource?
Customers.
Okay, customers.
Manpower.
Capital, sir.
Capital.
How capital is the resource?
Deposit, sir.
Yes, resource means deposit. Capital is required to open a bank. After the bank is opened, then bank should have some resource to do the business. So banking business is defined under Section 5B of Banking Regulation Act. That is accepting deposit for the purpose of lending and investment. So to do the lending and investment, what resources you need? You need deposit. Unless deposit is there, you cannot lend or you cannot invest. Because lending and investments are our income generating assets. So these are deposits or resources. So that's why the liabilities are resources, assets are uses. So deposit is the main uses, main fund or main resource for the bank. So some of the banks will be opened in such area where the branches can canvass more and more deposits. Deposits like savings deposit, current deposit, or FD. These three deposits are the main deposits of the bank. So those branches will be opened as resource center. So can you tell me what are the places where these branches will be opened, which are to be termed as resource center?
Nearby temple, like that.
Okay, nearby temple. Nearby temple, suppose temple is out of the city, so what you will do in that temple? How you will get the deposit?
To the main lanes of the cities.
Okay. So
University or
basically,
colleges.
We'll open up
Residential, you know.
UBR branch for temple, sir.
Metro city, sir.
no, all the
Within the
cities it is
universities
possible.
and branches.
Okay, so basically, if you want a deposit, normally branches should be located in the residential area, not in the market area. In the market area, when there is no residence in that branch, deposits will be less. Rather, your business for lending will be more in those market area. But residential area or the area where normally people live, so many people live, so if that is nearer to them, they will come to the branch and open their account. They will place their deposit. So normally residential area, and whatever you think that maybe college or university nearby is there also, look, some residential will be also there. So it is possible. Say somebody told temple also. If temple is there and nearby also residential area is there, definitely temple is a good area. So according to that, the bank will decide which branches to be opened as their resource center according to the segment, that segment only. Okay, so that is one. Similarly, some of the branches will be opened as a profit centers. So do you think resource center, the branches who are having more deposit than advances, they will earn profit? Is that possible that profit can be earned by this resource center branch? No, because when you are having more deposit than advances, then definitely more interest you are paying on deposit. So this cannot be a profit center. Profit center will be those places where your most of the loans are can be given.
Table sangat terga.
Mr. Apparao, if your dialogues are over, then I can start. Okay. So profit center means at those areas, banks open their branches so that they can lend more. So lending oriented branches, maybe at marketplaces, maybe at commercial places, maybe in the industrial areas. So those places, the branches which are to be opened, they will be called the profit center branches because their deposit might be less, but lending will be more. Similarly, some of the branches can be called the priority centers, or where the priority center means whatever the priority for the bank is there, or the priority of the service can be given according to that priority that can be. Or some of the branches can be as a general centers. General centers means mixed of lending as well as deposit is there. So according to this type of approach, which is adopted by bank for its business, those approaches called segmented approach. I hope it is quite clear to understand. Clear? So what is segmented approach? So if the question comes, then easily you can answer. Suppose question comes, the branch is open in some market area as profit center. So which business approach this is? So you can say this is under segmented approach. Okay. Next is geography based approach. Geography means entire our country. Say any country. Say we see our country, India. So geographically, India is quite diversified. So north, south, east, and west, both are, all four corners are there. So different tradition, different cultures are there according to the thing. So even central India is also there. So based on geography, again, as per the geography, bank will look into the fact that what kind of business potential is available under this 4 or 5 corners. North, what type of business potential is more? South, what type of business potential is more? So according to that, when branches are opened, say some of the branches, say for example, I'll tell you, in South India, normally you see very popular retail product which is sold in South India, retail lending product, that is gold loan. Means loan against gold. It is very, very much famous and very popular in South India. If you go to the Northeast or North India, or even the some of the East Indian part also, you will find no branches are selling this gold loan. Only gold loans will be sold to those people who are there, who are from South India only, because those people, they do not have a say interest in taking loan against gold. So according to that, in South India, such branches will be placed and so their employees and their resources will be trained to give such gold loans. Some of the areas might be where you'll find in the residential area credit card, or some of the areas where some industry, say office areas are there, most of the big corporate houses are there. In such area, apart from business centers or profit centers, you can sell your credit cards also. Some of the area you see residential area, you can sell mutual fund, you can sell insurance, all third party products can be sold in the residential area. So according to that, south, east, north, west, according to that, you can see what type of business potential is available. So we will open that kind of business model branches, and we will focus on selling those specific products in that branches, so that the people will be placed there, they will be trained to sell those specific things. So those are called geographically based approach. And third one is classification based approach. It is very simple. So it is a strategy of the banks. Normally it is a common strategy of the banks, where branches are designed based on the type of branches. Basically, type of the branches means, so very simple thing. We have all the banks, we have rural branches, urban branches, semi-urban branches, and metro branches. So these four classifications are done. So this four classification, when it is done, so based on the actually the population and the development of the area, so rural, urban, semi-urban, metro, like this, whatever the area, the branches will be opened in such area. So this strategy of business approach is adopted by different banks because of the fact that such approach helps the bank in better product structuring. So they can structure their products. So specifically, some of the products will be sold in those branches. Not all the products will be available in that branches, because more of the products which are actually attracted to the people, those products will be available there. Okay, so this type of, see, simple thing. Do you think that, say in North India, normally in the winter season, it is very cold and temperatures may drop down below 10 degrees. So it can be below 10 degrees. So in North India, you will see that most of the woolen garments are sold very predominantly in North India. Whereas if you go to Tamil Nadu, or even in Karnataka or such places, there is not so much cold. It is never going to be less than 15 degrees. So woolen garments will be there, but not so. So that means, according to the geography also, the industry of woolen garments you will find more and more in North India rather than South India. or Western India also, because temperature is not. So according to that, that is the strategy which a businessman will adopt, where to sell what. Because if he opens a factory of sweater, everything in Tamil Nadu, he may not have that much of sale, but he can open it in North India because it is sold. They are very, it is the requirement over there. Himachal Pradesh, Kashmir, Punjab, all Haryana, all Delhi, all these states, they are very cold. So that this classification or business approach methods are done by the brands to help them to structure their product adequately so that more and more of such products can be sold. That is the reason for this business approach. Okay. Now we'll see next part is about how to price the retail products. Pricing is your how to arrive at the what kind of rate of, what is the rate of interest to be applied or to be charged to such and such product. Although nowadays, if you just go by book or by the method that those are the factors which you take as a components of rate of interest. If you take those components only, arrive at the rate of interest, which is X%, then that might not be totally feasible. Because nowadays, due to this competition, the pricing of all the products are rather market driven. This is market driven because there is a competition. So you are fixing up the price as per the book method, that these are the factors, I will take these components, these are the different factors, so add up those things, X is the rate of interest, I will apply this. This is not going to work, because if it is more, then people will not buy it. So the pricing is normally, it is market driven and because it is competition nowadays. But I can say that though it is market driven, you have to be competitive. But entire pricing method is totally dependent on the asset liability management practice of the bank. Asset liability management means what? Normally your resource is your liability and you are lending, that is your asset. So asset and liability to be managed properly. So you have to match the asset and liability accordingly. What is the availability of the fund and what rate you are getting it? It is not that only fund is available. Again, what is the rate of interest you are paying to the depositor, or if you are borrowing from the market, what is the rate of interest? So what is the cost of fund? So cost of fund plays a vital role, because when you are going to create an asset from the liability, cost of fund will be the main component to decide the pricing. Okay, so basically market dynamics is the one thing which actually decides the pricing of the thing, but asset liability management is the next thing which actually decides the what should be the rate of interest. See, as regards competition, now you can see that banks like State Bank of India, Bank of Baroda, for example, these two banks, they have started implementing aggressive pricing strategy. So their pricing strategy is very, very aggressive, because especially when I'm talking about housing loan. Housing loan interest rate, whatever they are offering, they are the lowest in the market, because they want to capture the entire housing loan segment, because they are a stronger bank. So not only that, they want to capture all the fresh or new account, but also want that other banks where housing loan customers are there, they will migrate to these banks, because other banks might be charging them more rates, but SBI is offering a very lower rate than that. So they will attract those customers. So not only to capture fresh or new customers for housing loan, but also they want to take over the loans of other banks. So that is called the aggressive pricing strategy. So this aggressive pricing strategy can be adopted by only stronger banks. A weaker bank cannot do that. It is not possible for them, because if they lower their interest, then margin will be either nil or negative. So with negative margin, you cannot perform banking. Okay, so, and again, a risk perception is another factor, as I told you. So what is the risk, or what is the risk which is there in retail lending? Different types of loans are there. So for the last 5 or 10 years, if you can see, what are the default which has happened in our retail portfolio. So those risk, those retail portfolio where there are more NPS, where recovery is not there, then bank has lost something in those NPS because interest is not there. So that is a loss to the bank. So this loss which has happened in the past 5 years or 10 years, that loss has to be recovered from the next 5 or 10 years. So that loss, this loss can be factorized, and this can be recovered from the fresh loans given on retail portfolio, various retail loans you give, and that factor can be loaded as a rate of interest, so that the loss can be recovered in next 5 to 6 years. So this is the step-up pricing model. This is called step-up pricing model. Because what you have lost, you have to recover it. Yeah. Again, step up means again what? So normally step up means normally how it will be done. If you do that immediately, customer may not be attracted to you. So step up pricing model is that initially you will offer a low interest rate, but gradually that interest rate you will offer a floating rate of interest, and gradually they will be increased. So SBI does that. SBI housing loan, they always have a floating rate of interest for the, at least for the 2 years or 3 years period. After that period, the rate of interest is changed. That is, they change the rate interest to fixed. So which is definitely more than whatever the floating rate of it. Okay, so that risk perception has to be added. Then return expectation. Return expectation means about that how this talks about the borrower capability or capacity to repay. So how much NPA you are expecting, or how much, say you can say that 10% of the loans we are giving in future may turn NPA, 90% will be okay. So according to that, the price of 10% has to be loaded into interest rate, because you have to compensate that losses. You are thinking that 10% of the loans will fall into NPA category. So this will be my loss. So I will factorize this and I will add that interest to the good loans so that this loss is compensated. Okay. Then according to duration or tenor. Normally you see, you accept the housing loan. When the durations are less, normally rate of interest is lower. When the duration is more, normally the rate of interest will be more. Because according to duration means you do not know what will happen after 5 or 6 years. What will be the rate of interest culture in the country? You do not know. So normally for that reason, you always add more margin to that. And ALM position I have already told you. Then according to the customer profile. So customer profile in the sense, you will do this CIBIL rating and other internal rating to know the credit worthiness of the customer. So according to the rating of the customer, if the customer is of good profile having a higher rating, then definitely higher rating means lower risk. So low risk means you can give him a lower rate of interest. But when the rating is lower, means risk is higher, then definitely more interest rate has to be charged. Okay. Then resource position, that is ALM. Resource position means your fund position. If you are having enough fund deposits are there, then fine, no problem. Your margin will be enough. But when you are depending on borrowing from outside, say repo or any other banks, always you want to borrow for say a week or something. So more interest is paid for that. So in that case also, if the resource position is only deposit, then lower interest rate can be charged. So pricing can be moderate. Otherwise, if you depend more on the borrowing, where you are paying more interest, then interest has to be more. Okay. So these are the things. Other than that, to compensate this pricing thing, when you are giving lower interest rate in some of the retail loans, because of the competition in the market, which is market driven. So that means you are charging below your break even. Sometimes you have to charge below your break even. That means you are not earning anything. You are losing rather. So to compensate, to make a profit, which is break even plus something, the additional, that difference amount of interest has to be recovered from other type of services which can give. So normally bank tend to go to third party services or remittance facilities or issuance of DD, etc. Or to offset that thing, some of the customers, suppose a customer comes to you having a housing loan, a customer is having housing loan with you where you are charging say 6.85% interest rate, whereas SBI's rate of interest is say 6.65%, suppose. So there is a 0.20% difference. So normally SBI always targets that these people should come to SBI. So that person will also say that you are not reducing your interest, SBI is offering this, so I may go. So you cannot reduce that interest rate for that only particular person. It has to be reduced for all. But to compensate that 0.2%, so you can retain the customer by allowing him some price concession. Some price concessions may be allowed to that customer in other services than the housing loan. Like you say that all your remittance facility, if you want to remit money or transfer money over RTGS or NEFT you are doing, we will make it free. We'll make it free. Say monthly, I can say that monthly 10 lakh rupees you can transfer without paying any NEFT charges or RTGS charges. We will issue demand draft if you need. We will issue demand draft free of cost for you. We will waive the service charges for or this service charges and other things, say inspection charges, service charges, or loan processing charges for you. So this can be offered to offset those things so that you can retain the customer. So these are the different strategies adopted by the bank as far as pricing of the rate of interest is concerned. Okay. Now about retail products. Retail product, there is no such thing to discuss because you all know about what are the retail products. Basically, we have all the liability products, all the asset products, as well as we have your contingent liability products. So balance sheet products are liability and asset. Outside the balancing or upside up balance sheet products are called contingent liability product. So basically, you can say liability products, asset products. Now, these are the three types of products normally bank sells. So liability products means simple thing, all the savings account you are opening, all the current account, and all the term deposit or fixed deposit account and RD account you are opening. They are the most common thing. They are more stable in nature and they are called the core deposits. Normally they are the They form the core deposits of the bank. Fixed deposits are more core in nature than savings and current, but part of savings and current accounts are also core deposit because they stay for a longer period in the bank. They are not normally withdrawn. So other than that, you offer to this deposits or some other value added service are added. Say you give all of them debit cards, credit card, or sometimes ATM cards, or whatever ATM facility is given, internet banking is given, your mobile banking or smartphone banking is given. So these are the added products which are essential. If you do not give them, they will not open this up, because nowadays they have become a essential value for the customer. Okay, so this is why sometimes some other facilities are given, like flexi deposits or sweep accounts. So different names are there where some of the facilities are given in such liability accounts. Auto overdraft facility, some premium savings account where the customer is supposed to maintain at least rupees 1 lakh balance. If he maintains 1 lakh balance, you can give him an interest rate which is more than 3%. So you say that I will give you 5% interest if your balance remains 1 lakh every quarter. Some banks are offering, if you maintain a 10 lakh balance, they will offer 6% interest even, whereas the savings interest is 3%. Savings plus, those are called savings plus account or savings premium account. Basically, to attract the high value customers, such accounts can be opened. So they do not want to put their money in the fixed deposit, they will put their money in savings account. So you can think of any liability products within this thing, and you can modify those products to attract more and more customers. Asset products, simply retail loans, all the retail loans, because retail loans are now the backbone of the revenue generating assets of the bank, because they generate the better yield and they improve the bottom line of the bank. Bottom line means your profit of the bank. So the product price, process, and delivery invoices are the main objective of the retail asset product expansion. When you are expanding your retail products, you have to look into the product appropriateness, look into the price you are offering to them, look into the delivery mechanism of the product, how you are doing. So in the retail asset product, every bank is focusing much more. Focus is so high that in some banks, the retail asset constitute as high as 40% to 50% of the total loan. Whatever the total turnover of loan is there, retail loans are 40 to 50% nowadays. So it helps the bank to generate more income because risk is spread. We have discussed that the first day we have discussed. Risk is spread. So different types of loans, you give housing loan, you give vehicle loan, you give personal loan, you give gold loan, whatever type of loan are available, you can design those loans for the individuals and you can sell it. For any kind of thing the person wants a loan, you can design it and give it. Banks are more focused on this because retail loans are the bread and butter of all the banks. Okay. Then as regards the contingent liability products or other than liability and asset products, normally banks earn definitely a good fee or commission from this contingent liability product, which we call the non-fund based advances. Non-fund based advances or the third party products. Means you are selling insurance, mutual fund, etc. So these are done by the bank without deploying any of the resources deploying the funds. Fund is not required here. Deposit is not required. Without deposit, you can do this business. So you can issue bank guarantee. You can issue LC. You can issue derivatives. You can do some options, futures, whatever is required by the customer, business customer. So this can be issued by the bank where fund deployment is not required. Fund is not required at all. And to earn also, we are selling insurance. You are selling group insurance, health insurance, general insurance, mutual fund, all the things. And some of the things we offer as, say, accidental life cover introduced in the credit card. So those things are offered to attract the retail customers. So these are the different types of products. I am not going to discuss those things because these are very common, you know. Credit card, see what, who is questioning this? Muhammad Wajid. Okay. So credit card means what? In credit card, when a bank issues credit card, that means a person who is using the credit card, does he pay the immediately when you buy something? You answer me.
No.
No. If no, then who pays? Who pays it? Payment is done by whom?
Banks.
Bank. So that means bank is paying. Bank is paying on behalf of you. So after some days, you are making the payment. So for this period, when bank is making payment, means bank is giving a loan to you. So when it is a loan, loan is always an asset product. It cannot be a liability product.
Okay, sir. Thank you.
Okay, always see, when you have given something, when you want a return from it, then it is an asset. But when you take something from somebody and you have to return to them to that, that is a liability. So deposit, we take deposit from the public. We owe them. We have to return that deposit. So these are liability. Think in that way so that all product you can differentiate whether it is an asset product or liability product. Okay. Now, other than that, other than these services, some of the different other things are product and services are offered by the bank. So we call them alternate delivery channel. First one is alternate delivery channel, means apart from branch banking, where the branch is there, where face-to-face customer interface is there, you give service, that is separate. Other than that, you have your ATMs, you have some kiosks, you have internet banking, you have phone banking or mobile banking. So all these services are other than the physical delivery services. So these are called alternate delivery channels or alternate delivery service channels, where the customer gets the services not coming to the branch, but he can get the services at sitting at home or whatever he wants. Okay, then you also offer depository services. Depository services means basically you open demat accounts for the customer, because this demat account is required for the customer when the customer wants to invest in shares or bonds or debentures. So normally shares and bonds and debentures or sometimes some other instruments are to be issued in dematerialized form only. So for that purpose, they have to maintain a demat account. So this service is given by the customer's bank, and a little bit of fee is charged to maintain this account. Then some banks are offering broking services also. This broking is normally when somebody wants to invest in shares or bonds and deliver debentures, etc. Normally they cannot buy it directly. So they have to go through a broker. So some of the banks also act as brokers. Merchant banking service is given. Merchant banking services means, suppose a company wants to issue shares to the public. Say we call that IPO or FPO, whatever is there. IPO is for initial public offer, FPO is follow. First time issuance is IPO, second, third, fourth time, whatever, that is called FPO. So when the company wants to issue shares to the public to raise its capital, that point of time, lot of things are required. And all those things which are required by the company to complete the issuing process, at that time, all these processes are carried out by merchant banking services. So entire process has to be done through merchant bankers, because there are so many intermediaries involved in the share issuance process. So one of the intermediaries is the banks who act as a merchant banking. Sale of gold coins. Now it is not so important because it has been almost stopped by the RBI. Bill payment services. So bill payment means it is the different types of bills of the customers are paid by the banks. Bills mean your water bill, credit card bill, whatever bill you want to, your DTH bill. So many bills are, your broadband bill, whatever bills are coming, that payment can be done by the bank. So you just put on standing instruction so that as.
So what about
that,
gold bonds, please, sir?
What about?
Gold bond.
Gold bond. Yes, that is also there. Whenever government announces that sovereign gold bonds to be issued, that time banks are allotted. Bank can also issue those things on behalf of government. Bank can.
It's a replacement of gold coins, sir.
Pardon?
It's a replacement of sale of gold coins, sir.
Yeah, sale of gold can have been totally stopped. Gold coins are not to be sold by any banks RBI's direction. But that gold, you are telling about gold bond, sovereign gold bond, they are not gold. They are in place of gold, gold bonds will be issued. These are not physically gold, sovereign gold bonds. So it is like a thing that you are investing in gold, but you are putting your money instead of physical gold, you will receive bonds. So that is just a replacement of that. So gold directly, it is not possible to be sold by any bank or any financial institution. Okay. Some of the banks also started AR and real ticket booking also. Like your Make My Trip, Ease My Trip, like that. Banks also tie up with that, and they also provide this service to the customer. Wealth management service. This is normally for the high net worth individuals. Some of the banks, they take care of the personal wealth management service of the big shots because they do not have time. So they advise them, they take their money, they invest that in good assets so that return will be high. So entire portfolio of a person HNI can be handled by any bank, but through this wealth management. And portfolio management services, again, these are the money invested. Portfolio management means suppose a person is having different types of portfolio. He has shares, he has debentures, he has bonds, he has sovereign gold bonds. So many portfolios are available to that, and it is difficult to manage that individually by that person. So he can appoint a bank services where banks experts will be handling the entire portfolio of those HNIs who have got different types of investment in his basket. So these are the other products which are offered by the banks. Okay. Now we'll see that what is the difference between retail banking versus corporate banking. It is very simple. We have discussed that retail banking targets individual customer, whereas corporate or wholesale banking targets corporate clients only, companies, firms, business entities only. But here, individual customer or individual small businessman also it is given. Then the marketing process which is involved in retail banking is mass marketing. There is no individual smaller segment marketing, mass marketing. You are advertising through TV, you are advertising through different social media. So it is it is seen by most of the people in the country. So that is mass marketing. But in case of corporate thing, you cannot succeed with mass marketing because the corporate are a very small segment. So you have to approach them through your advertisement or through your publicity individually, because they are smaller segment of corporate clients there. So your marketing should be individually marketed. Marketing strategy should be applicable for corporate clients only. Here, retail banking is B2C approach, means business to consumer approach. So your business is directly with the consumer. But here, the approach is B2B. Banks business with the business of the corporate, because they are into corporate. They are not consumers. They are corporate. So B2B approach is applicable for corporate or wholesale banking. Okay. Why banks have stopped selling gold coins? What is the reason behind it? Okay. See, normally what happened? If you sell gold thing, gold coins, whatever. See, gold has to be where from gold comes. Where from the gold comes? Gold is normally in India, there is no such gold mine available right now. So whatever gold is coming, that is coming as an import only. Import only. So for a few years, government started this gold coin thing so that branches can sell the gold when the gold price was okay with us and gold price was not that high, and bank can sell that and earn a commission. But now thing is that import of gold is very, very costly for the government, because this entire selling of the gold coin was done by the government only. So government found that it is not so lucrative business to sell the gold coins, because gold is not so much rampantly available. It is becoming costly. So they decided that no, it is not beneficial. We should not sell it. Let it be sold by the private people only. They can buy from the government and they can sell it, or they can import from outside. If they will import also, then definitely government gets the duties, import duties, government price. So they thought that this is not a profitable as far as the time is concerned. So for time being, we will stop it. So that's why they have stopped it. Okay. So basically, they are targeted for lower customers only. So normally, the gold coins maybe 1 gram, 2 gram, up to 5 gram. Those coins are sold by the bank. So that's the middle class people, they can afford those things. Banks were not allowed to sell gold bars. This is not possible. So these coins were not so feasible or profitable. So that's why the RBI thought and government thought that it should be stopped. Okay.
And also the foreign exchange might be going out also, no?
Yes, when you import, your foreign exchange is going, na? So that's why it is not profitable. That's why government thought that it is not so profitable. So why should we sell now? For a few years, it was in the market. After that, RBI told that no, we should stop it now. So retail loans are loan or deposit, whatever they are low ticket size, means amount or quantum is very low. Whereas for corporate, it's high ticket size. Normally it in say 1 crore, 5 crore, 10 crore, 100 crore, 500 crore, like that. Risk is spread, already you discussed, but here risk is high. Because the ticket size is high, risk is always high. One corporate loan goes bad, the bank is hit with at least 500 crore or 50 crore or something like that. Okay. Returns are more spread, more as spreads are more. When the spread is more, so our return will be more. Means our income will be more here. Here returns are comparatively low because there are small segment of corporate clients and they always bargain. So total return, if you calculate, it might be comparatively low here. for as far as single corporate client is concerned. But still, as a whole, if you see, corporate loans has to be given, because otherwise you have to find thousands of customers of retail where the one corporate loan can be equal to thousands of retail customers. So if a good corporate customer, one customer, if you are giving say 500 crore, then definitely return will be more here. Then your cost of maintaining 1,000 or 5,000 retail customer will be little bit higher. So as per that comparison, you can see. Then monetary and recovery is laborious because number of customers are more. Individually, you have to do that. Here it is smaller segment of people are smaller segment of corporate clients are available. So recovery process may not be that laborious as it is in the retail. Cost of deposits are low due to smaller ticket size. So cost of deposit means what is the interest rate you are paying on your liability products. So when you take the average of the cost, that might be definitely less. Whereas here cost of deposits are higher because corporate always bargain and they place bulk deposits with the banks. And they desire that banks should pay more interest to them. If a retail customer, you are paying 6.5%, then a corporate customer, if he bulk deposit of say he puts 100 crore, he will definitely demand that you should pay me 8% or 7.5% at least for the same period. Okay, so cost of deposit will be higher in corporate. Then impact of NPA would be less. Already you have discussed about that here in the risks. So because one loan, corporate loan hits means it's a big size. So NPA's impact will be more for the bank. Whereas in case of retail, since the ticket size are low, so if one loan or 10 loan or 50 loan goes bad also, the losses will be lesser than what would have been the loss in corporate loans. So these are the basic difference between retail and corporate bank. Now there is a classification of the customer segment as far as the retail thing or any other thing is concerned. So sometimes these questions are asked. So this customer segment is divided according to the income levels of the customer. Tanusami, B2C, B2B. B2C means business to customer. This business is bank business. Bank's business is towards the consumer. It's directly connected. Bank's business is directly connected to consumer. Consumer means it is for his own personal use. Personal use. Whatever the products you are selling as a business of the bank, the consumer is using it for its personal use. So that's why it is called B2C. B2B is business to business, because bank's products are sold to the corporate who do not use it for their personal use. They use the bank's fund to resell or commercial purpose only, because they manufacture something, they trade something, and those are sold to the consumers. So that's why corporate lending is called B2B and retail lending is called B2C. I hope it is clear. Okay. So the customer segments are classified according to the income levels. So according to that income level, so basically the customer segments are there, and according to that, marketing strategies can be devised by the banks depending on what classification of customer you are having. So basically these incomes levels are in the lakh. So up to 2 lakh, from 2 lakh to 10 lakh, or we can say from up to 10 lakh income level per annum, they are called mass market customer. So the marketing approach will be mass market. 10 lakh to 50 lakh is a little bit richer than the mass market, so they are called mass affluent. Affluent means rich in wealth. Okay. Then 50 lakh to 400 lakh or 4 crore, they are treated as super affluent. Then 4 crore to 40 crore, 4 crore to 40 crore, they are called high net worth individual. So HNI, we can call it HNI. Then 40 crore to 120 crore, they are called super high net worth individuals. Then above 120 crore, they are called ultra high net worth individuals. So according to this, you can just remember this. Sometimes questions are coming, which income level they belong. As far as retail banking is concerned, banks are more concerned with these first three only. Because HNU, this type of customers, normally for them, wealth management or personalized services are to be offered. Okay? Normally, the banks design the products and sell these products according to the need of these three segments only. Mass market, mass affluent, and super affluent. And these are totally different because for them, individual service or individual product has to be designed. You cannot sell one product to more, say 100 H&W, you have to devise at least 100 products for it. But here mass market, you can devise one product for say 10 lakh people also. That is possible. So that is the difference. So as far as retail banking is concerned, first three segments are more important. Okay. Now we'll go to the next part is we'll just discuss about the how to sell our products or how to market those products, how to design the product development, other things we are going to discuss. So
Sir,
we know that.
Sir, previous slide, please. Previous slide, sir.
This one?
Sir, yes.
You are taking a screenshot, you can take it. It is there in the book. Book, study material, everywhere it is there.
Thank you, sir.
Okay. So next we will discuss about what is the customer need. According to the customer need, bank have to design the product and sell that product. Because unless you find the need, you cannot design a product and you cannot sell that product. Without knowing the need, if you design the product, you might not be able to sell that. So you are spending something to design the product, but you fail to sell them. So what is the need? So basically, we should know the need of the customer before we design a product. Here is first, because why it is required? Because every customer is totally different from each other. According to that, their needs are also different. Because every customer is almost unique for. So need of customers are always different. Each customer will have a different set of needs for financial services because we are selling financial services. So their need will be totally different. So need requirement will be also unique. So basically customers, we can call that customer differentiation. That is customer differentiation. So we have to make the differentiation between customers. So we have to see the group of customers. We have to find which group of customer they are. So according to that thing I told you, mass market, mass affluent. So those things are the differentiation. You have to group them. So customers are grouped together based on their need. Or we can call that need pyramid. We can structure a pyramid according to the need pyramid, which I will show it in the next slide. We'll discuss that need pyramid, which is basically the theory of Maslow's theory of hierarchy. According to the need pyramid, the customers can be grouped. So based on the needs and other parameters, you can create groups of customers. So basically, what is the need and other parameters? Need means, so we can say that customer can be, first we saw that last slide, customer are grouped according to the income. So we can have a different income group of customer. We can also have a different age type of customer. Say we have a range of age, say 20 to 35, 36 to 45, 45 to 60, 60 and above. Like that, we can group them, and we have to sell them those type of products which are needed by them. So you cannot sell a reverse mortgage loan to a 20-year, 30-year person because they are not eligible. So reverse mortgage loan is only applicable to the customer which are at least 60 or more. So only to them you can sell. So that's why this differentiation is required. You can also difference according to the gender, male, female, according to the profession, what profession they are doing, whether they are doctors, CAs, bankers, like that, according to their job or employment, where they are doing the job, according to the family size, what are their family size, according to the geography, South Indian, North Indian, East Indian, according to that, what are their need? You can easily differentiate that. So basically, that is what you have to find the need according to the group of customer you can divide, and based on their need and other parameters, you can start developing your products so that you can sell the appropriate product to the appropriate person. Okay, so products and services are to be developed by the bank to satisfy the various needs of the customer as per your customer differentiation, your group you have selected. Because customers always buy the product and services to satisfy their needs only, to satisfy the needs. I have a need, then I will go and buy that product. If I do not have need, why should I spend money to buy those unnecessary products? So if the customer's need matches with the bank's product and services which are designed, then this is the absolutely synchrony. We can call that this is synchronization, so that more and more product can be sold. So that means your bank products and services, what you have designed, you have promised that we will satisfy your need. So if those benefits which are offered by your product and services, if they are promised, delivered as per the promise, then there will be absolute customer satisfaction. Your products will be sold very popularly. You can show that. Okay. So that need, what you can needs are different. How this need requirement to be known. So because of that, we have to, that need pyramid theory has to be done. So this need theory is the propagation of Maslow's hierarchy theory. So this is a theory which is Maslow was the economics who proposed this. This was meant for the economy only. What is the need in the market? But we can also relate this pyramid theory to our banks and products, products and services also. Because the needs of customers can be related to Maslow's hierarchy theory. So according to that, this theory, the theories are based on the different types of needs of the person. So generalized, the Maslow has generalized the thing, and he has classified the needs as physical needs, safety need, security need, social need, self-esteem need, and the self-actualization need. So he has classified those things because Maslow has stated that each individual has the capability to move from a lower need to higher need after the lower need is satisfied. I'll show so basically I can show you the need pyramid. So pyramid is like this. This is a pyramid, Maslow's theory of hierarchy theory, he constructed a pyramid. So the base of the pyramid, he told that this need is physical need. This is physical needs. So at the base, physical need is there. So physical needs, the area is much more. There are so many things available in physical or physiological need. After this, second need is, he told that this is safety need. This is safety need. Then next need he is classified as security need. Then he told that next need will be self-esteem need. Just remember those things. In books also it is there. Sometimes questions are asked. Okay, self-esteem. And last one is, he told that this is self-actualization need. So need hierarchy. This is the lowest need, this is the highest need. Self-actualization need means when a person attains this need, that means he does not require anything material from the world. So he becomes spiritual. He has achieved self-actualization. No material thing is needed for him. So that is the top need of any person. Okay, so physical need is the lowest one. Then comes safety need, then comes security, and then comes self-esteem. We will discuss about these four only, because self-actualization is not required. That is, nothing can be sold to him. So as far as the marketing or bank marketing is concerned, Maslow says that when a person's physical need is fulfilled, once this need is fulfilled, then only that person move to the next higher need. He cannot move to the security and self-esteem need immediately. He has to go through this process. After he satisfies the safety need, then he will move to security need. Then he will move to self-esteem need. After that, he may achieve the self-esteem need. So it is gradual promotion. Unless you fulfill, like if you pass JIB, you go to CAIB. You cannot directly go to CAIB unless you have passed equivalent JIB equivalent examination. So you have to go through this process. This ladder has to be go one by one step only. Okay. So this is related. This type of needs can be related to our banking products and services. And we can see a person is at what level of need. So whether he has his physical needs has been completed, he is in the second ladder or third ladder or fourth ladder. So accordingly, products are designed. So only this type of products are to be sold to this ladder only. So this type of products to be sold to this type of. You cannot sell these products to the physical need only. And physical need products, say these are the physical need products. You cannot sell it to self-security need products. So in banking, that is possible. So banks normally design. So basically, as this is not actually true, this is suggestive only. There is a suggestion that this is. So basically, we can see that what type of products are there or matching banking products or services are there which can be given to this physiological or physical need requirement people. So your savings accounts, housing loans, or small, say, current account, fixed deposit, some of the smaller ticket fixed deposit account, they can be offered to these people only because they do not have surplus money with them. Enough surplus money is not there. So only, suppose somebody has only getting salary, say 20,000 or 30,000 salary is there, nothing else is there. He has started just job now. So he can only open a savings account. After 3 or 4 years, even there is no such surplus, so he is not putting more money in FD or something. He might have opened some of the savings account or some of the RD account, very low amount RD account, and he might be needing some of the housing loan or some of the consumer loans also. So to them it can be given. After this stage is over, when he acquires some service, he saves something more. So you can offer the recurring deposits or fixed deposit, or you can sell them life insurance product or any tax planning product, mutual fund, or any accidental insurance cover can be sold to them. After they achieve this one, next you can sell that where the people want that they should have a status in the society. So they have to fulfill the social needs. That means they want to buy some good gadgets, a bigger TV, a good fridge, AC, cars, a better home. So like this, you can offer them consumer loan, personal loan, home loans, car loans, loans for professions to start a clinic or start a chamber for say chartered accountant. You can offer them gold coins, which is now not in circulation. Health policies can be offered to them. Unit link schemes or systematic investment plan products under mutual fund can be sold there. Then when these are sold, next group is your esteem needs. Means they are actually, we can say that they are more affluent people. So you can offer them special term deposits, some term insurance products where they can invest. So 1 crore, 5 crore, 10 crore of term insurance products can be sold to them, insurance products. Second, housing loan can be given. House improvement or home decor loan can be given. Then self-actuation need, actually this is when you relate to the banking, we say that this is meant for more than 60-year people who are living on pensions. So we can offer them pension, loan against pension, or some of the retirement benefit solution, or some of the pension plan insurance cover, or senior citizen term deposits, or even you can sell them reverse mortgage loan to them. So according to the Maslow's theories of hierarchy, this type of, if you can find the need of the people or customer, you can sell directly them. These are so unnecessary cross matching will not be done. Only the product which is required to them that can be sold, because cross matching will be totally futile. Okay, so you should remember this. Sometimes questions are coming. So if you understood this, then you can easily answer this. Next is about the what is the service quality which is required to be given to the customer, or what the customer wants. Customer wants what type of service, how to satisfy them or how to delight them. First you have to satisfy, then comes the delight, then comes the ecstasy. So if you delighting a customer, he becomes more loyal to your bank. He will not leave your bank. So customer retention is more important. Okay. So the service quality can be defined as this: tangible service, reliability, responsiveness, assurance, and empathy. So what is this? What is tangible? Tangible means basically it is about the touch and feel. So basically, we can say that this is about the appearance of the product, how the product looks, appearance of the physical facility, the equipment, the communication material of the bank, whether the bank premises are really good. There are some say sofa or couches are there. We can the customer can go and rest there, wait there till he gets the services. Are the bank's facilities which are given there attractive enough? Is the credit card statement which is offered by the bank or sent by the bank, the card holder, it is easy to understand, there is no complication? is a passbook which is printed by the bank. It is really readable. You can easily understand. A common man can easily understand that one. Or the passbook is not printed. It is given as a through your email you are sending every month, or it can be opened in a net banking or mobile banking, whether that is easily understandable. So these are the features which customer wants, which are called tangibles, about what it looks to them. So look should be soothing, comfortable look. Then only there is a creation of satisfaction in the customer. At first look, he says, okay, this is fine. I like this bank. AC is working, everything is fine. I can sit there. The people are nice. So these are the tangibles which the customer wants. Second is reliability. It is about the service you are offering. Means bank, whatever bank promises, when you sell the product, your product details in the brochure or leaflet or in your website, everything is there. These are the things we sell, and these are the terms and conditions, and these are the service we offer. So according to that, whether the bank is fulfilling the promise, what the bank has promised when the products were announced or published. So bank's ability to perform the promise, that is the reliability. Means bank is sticking to the agreed terms and promises or conditions. Suppose when it was told that the loan will be sanctioned within 3 days, your website says that within 3 days we will sanction, within 48 hours we will sanction. Does the bank following the same promise? So that is called reliability. Is the credit card statement, is the bank statement, or is the say Form 16 or whatever is generated by bank and TDS statement, whatever the bank is giving, they are accurate. So these are the reliability which also matters to the customer. Then the responsiveness. Responsiveness means how helpful the bank's employee or bank's systems are. Because when physical one-to-one service is concerned, then only it will be bank employee. Otherwise, the service is offered through technology, so digital services. So basically, this means the bank's employees' willingness to help. Willingness to help and provide prompt service. So prompt service is what the customer requires. Miss Pranita Sahu, can you please mute your mic? So this is about willingness to help and provide the prompt service to the customer. When there is a problem faced by the customer, does the bank resolve it quickly? How promptly this is resolved by the bank? Whenever any charge which is debited wrongly, whether those charges are reversed within a reasonable time. So this is about the responsiveness of the bank. Any complaint which has been given by the customer, within 48 hours, whether the complaints have been resolved. So this is about responsiveness. Assurance. Next is assurance. Assurance means basically through assurance, a bank is giving the services and assuring the customer, means you are instilling loyalty and faith in customer. So their loyalty, their faith is increasing due to your assurance. So you can give assurance to increase their loyalty or increase their faith through your competence, bank staff's competence, your courtesy, how courteous you are, your credibility, your security, bank security towards customers. So this is about giving assurance so that customers' loyalty and faith will be, customer trust, loyalty, faith will be high. Then empathy. Empathy means understanding the customer, understanding the service expectation of the customer. Because you are a banker, customer has his own problem, so you have to put your shoes in, put your foot into his shoes. Means you have to look into or feel into what is customer's point of view, where he is feeling the difficulty. That is called empathy. Basically, empathy means how easily the bank people are accessible, or bank people can be contacted, whether they are customer care and other persons who are branch manager or other person who are responsible, they are easily accessible, they can be contacted, whether their communication is clear, they keep their customer informed, they understand the customers. So they make always good effort to know their customer, know their need, and try to resolve their issues. So this is about the empathy. So whenever such things, questions will be asked, so you can easily answer those. So basically, what a customer require, or what customer need, what is that need of customer? So basically, customer needs right product mix. So that should be a right product mix to satisfy different type of customer segment. Different type of customer segment is there. So you have to have a product mix. Only one product cannot satisfy. So you have to have various products to satisfy various customer segments. So we can say similarly, you have to have a right service mix or right channel mix, both physical channel as well as electronic channel, which should satisfy the service which is required. And definitely, what is your process time, TAT, that also matters, turnaround time across the product. How far you are adhering to this turnaround time, delivery of the promise with regard to your product and services, and through channels. So effective communication, these are the requirement or need of the customer. If such things are fulfilled, then your retail banking will be definitely at a good level. Tangible means appearance. As I told you, appearance, what you look at. Your eyes should be soothing. Do you go for vacations? When you go to vacation, what type of location you want to go? You may go to a seashore, or you may go to mountain, or you may go to some places where the Himalayas will be there. So basically, why you go to these places? Because in city life, you are totally bored. So once in a while, at least once in a year, you want to enjoy the appearance of the nature. So you want to stay there for 2-3 days so that it will be peaceful. Same thing is tangible. How the branch appearance is. What are the facility provided for the customer? Whether there is sitting comfortable sofas and other things are there. Whether there is AC is working. Whether water is there, drinking water facility is there. So that customer, when he's waiting, he feels thirsty, he can go and drink water. But what type of equipments are available? What are the communication materials which are sent, letters or emails or leaflet you send? They are attractive enough. Is the passbook or the statement of account which is sent to the customer, which the customer can generate through your internet banking or something, are they easily understandable, clear to understand? A common person can really understand. Is the bank's facilities are really attractive? So those are tangibles. So because when you see it, if you feel that it is comfortable, it is good, then you will be attracted. So appearance or physical facility available to the customers are called the tangibles. Okay. Next is, we'll discuss in our next class details about how this product development takes place. But before that, just a few things. This is the last slide we'll discuss. So the product is designed, or products are developed by the bank. So how these are developed? Different processes are there when this product can be developed. So first thing is that some of the banks, they develop their product, or they design their product, which is called independent in-house. So basically, this means the bank do not depend on outside. Their own employee, they have their own team, which are in marketing or selling. They will be doing the research in the market. They do the research in the market. They know the market dynamics. They will study. They are specialized. So bank has recruited them. So they will do all the things. They are paid salary. So they will be doing these things, and they will develop that product. When such things are done, they are called, just such type of method is called independent in-house product development. Then these are for general product development. General product development. So basic products will be developed. After these are developed, normally, then comes a stage which is called hybrid cross-pollination development, product development. That means these are developed, general products are developed for the mass market, normally for mass market only. After that, you also have to aim at some of the other market also, which is maybe, yes, say mass affluent market or super affluent market, which is higher than this mass market. So for them, you have to add some more feature. So incorporating of best feature in the products or services which are available in the market, or which is better than the availability product or market, when they are incorporated in this general product to make the product more attractive and to target the mass affluent or super affluent people, then that process is called hybrid cross-pollination. You have to add something, extra touch is given to that. Okay, so extra, so we can say extra masala or spices to be added, so to make it more tastier. The dish will be more tastier. Then product development can be done through based on the market. Purely it is based on the market condition and customer segment, what the market is now requiring, because market changes frequently, time to time. After quarter, 3 months, 2 months, or 1 month, the market might change. So at that point of time, you have to modify those products. Also, based on purely the market dynamics, when the product developments are done, that is called based on market dynamics, product development is done. Then based on customer segment. So we have discussed that different customer segment as per the Maslow's hierarchy theory, different segments we created. So what type of segment require what type of product? So for them, we have created such project. We have put there into shelf. They are in the shelf. So whenever required, we can sell them. Then sometimes the banks, they develop the product as per the instruction of the top management. Simply following the instruction of top management without any background research or analysis or following any market dynamics. Sometimes banks, they just see that what is your neighbor is producing, so I want to also launch that product. So that is totally when the instruction come from the top management, you develop your product. So basically, when you see this, these are the different approach or different way to develop a product. So, but the fundamental approach is to conduct a market research. If market research is not done, then the chances of failure to sell your product is more. Because unnecessary, when demand will not be there, only if you research the market, then only you should know what is demanded by the customer, what is the demand. Unless demand is there and only supply you make, then nobody is going to buy. So if the demand is there, then supply is made by the bank, then it will be matching, so you can sell it. So banks should conduct a market research about the need, about the gap, about the target group, about the pilot testing of the product, about getting the feedback and fine-tuning the product as per the requirement. If these are done, then you can design an attractive product which is appropriate, you can sell to the customer. Okay, so this is for today. Next class we'll look into the how product development process is done. This is the methods I told you how this is done. Then everything has to go through a process, how the product goes through a process from the beginning, from the creation in the mind to physically product will be totally prepared. So there is a process. When you cook a dish, you start cutting the vegetables or cutting the ingredients, then you add oil and those things, other masala and spices, then you put everything, you boil it, cook it and see that everything is done. Then finally product comes. Your dish is ready. So this is what is that process of development, product development. So we will cover that in our next class. So product development process will be covered in the next class. Okay. So any question?
Hybrid cross pollination.
Hybrid cross pollination, any product you have already, as told you, that independent in-house or like general product you have designed or you have developed a general product. But you want to add something, add some value to that product. Some product is there, but you want to add some additional value to the product, which may be prevailing in the market. Some other people might be also selling that thing which you are not having. So when such best feature in the product are added to the core product or general product, that is called hybrid cross pollination. A new thing which is added to the product as a value added thing, so that it will be attractive. People will be attracted to that. Or your next door seller, next door bank is selling that product, they are having that value, you do not have that value, so customer going to them. So basically when you incorporate some of the best feature in any of the product as an value addition is given to that product, which is may be available in the market or may not be available in the market, that is called hybrid cross pollination. Because already one product was there, X was there, you are adding some value addition Z. So this is becoming a hybrid and you are adding this, means this is called cross pollination. Pollination means you are mixing them together to make a product Y. With X already existing product, you have added some value as Z. So now a new product is come out which is Y. So this process is called hybrid cross pollination process.
Okay, sir.
Anything else? Next
Sir, there is
class
one
is
question.
Yeah, ask me. I'm here.
Sir, yesterday you told us about the 4 methods like horizontally organized models, vertically organized models, predominantly vertically organized models, and predominantly horizontally organized models.
Okay.
Sir, in the study material provided by the IBS, you told something looks different.
What is the different? You tell me.
Sure, sir.
It is totally that only, sir.
Read it again and tell me what is the difference. I think I have 3 things I've clearly explained, and this graphic I have given to you, which is not available in any material. You cannot find it in any material. This graphic is clearly understandable. You can understand these things. Where I have got wrong, you just tell me. Only this thing I have not given any example which bank is following. Otherwise, I have given that which bank is following this horizontally organized, which banks are following vertically organized, and which are following this predominantly vertically organized. Where in IBS material, what is the difference? You tell me so that I can read that material and I'll look into that. You see the graphics and you relate with this. This cannot be wrong. I have not made this graphics. This is from the marketing thing I have taken. See here, the entire thing, you can read the lines. This is created by Boston Consulting Group. Here written, this is the BCG. They are a world leader in this marketing and other things, giving financial advices. So they cannot be wrong. What I have told according to this. So they cannot be wrong. If you are thinking that something is wrong, then wherever you read, that has to be corrected.
Sir, in horizontally organized model, the IBS is telling that if your company culture is all about tapping into the creativity and imagination of your staff and empowering them to do their job without micromanagement, then you may want to set up a horizontally organized structure. Sir, you told that a horizontally organized structure is basically product based and a vertically organized structure is customer based.
Not base. I told that the data management is done. Database. I told that database is maintained in this way according to the product. Database is maintained. So these are database management thing. This is nothing concerned about staff and other thing. This is about how your business approach has to be, or how your database should be aligned so that you can strategize your approach to go into business. So basically your database is arranged in a horizontal manner in here. According to the, here it is product wise, simple thing, product wise. Here it is customer wise. I did not mention that staff orientation or anything. I have never told. Simple thing. When it is horizontal wise, means I had told you that this data of housing loan, suppose it's product wise housing loan product database is here. These are not shared with other loans. So these are other verticals. These are the verticals of the bank, different verticals. So they cannot have access to this data. So these are standalone data. There is no access to share the data here. Whereas in vertical organized, it is according to the customer. So customer means these are the customers. So your home loan, suppose home loan goes through this, means every, say, the vehicle loan goes through this, means this customer data can be shared with any kind of platform. Because it provides, the database management is providing the functionality across the products with the customer database. And this is maintained at a centralized process, which builds common origination and servicing the process across the retail banking products of the bank. That's what I told you. If something is written there about the staff orientation and other thing, then I don't know. I have to look into that.
In the IBS study material, it is written, sir. This
That-
model is
that-
followed by most public sector banks and all private banks, horizontally organized.
Yeah, that's what I told you. I told that most of the public sector bank, they are using this horizontal one. So that might be additional thing added there, which I have not told. Yesterday, I did not speak about those things at all.
Yes,
I have
sir.
spoken only about this. I have spoken about only data arrangement. That's all.
Yes, sir.
I have not about orientation of staff, how you do. I have never added anything. If that is written, then you can add that. That is a value addition might be there. That's
Right,
no
sir.
problem. Okay.
Right, sir. Right, sir.
Okay.
Thank you, sir.
Thank you, sir.
Okay. So good night. So we will meet on, I think next class is on 14th. 14th. Next, I think 1, 2, 3, 4.
Yes, sir. 14, sir.
4 theory classes are there and 2 sessions will bring the numericals only. So numerical parts, whatever there, I will not cover in the theory. Directly we will go to the numericals. Okay. So see you on
Okay, sir.
14th. Okay.
Thank you, sir.
Good night.
Thank you, sir. Good night, sir.
Good night,
Good
sir.
night.
Thank you, sir.
Yeah, good night, Mohanty, sir. Thank you. Thanks.
Good night, Viju.
Thank you, sir. Good night to all. We'll wind up.